Hi, I am Jim Jackson, and I am bonding over bonds with my colleague, Lauren Spalton. Lauren is a portfolio manager on our muni funds. Welcome, Lauren.
Thanks, Jim. I'm excited to talk about munis today.
We all are, Lauren. We all are. So I think it is worth noting before we start that we're taping this the day of the Fed meeting. The Fed did increase the Fed funds rate by 75 basis points, which met expectations.
Yes, I think it's also worth noting, Jim, that yields across the investment grade fixed income sector are at higher levels than we've seen in over 10 years in some parts. So at this point, we're thinking it's a really good entry point for potential investors.
We do think that you can't determine the perfect time to buy bonds, but we think with higher yields on offer, it makes fixed income an attractive asset class. So speaking of attractive asset classes, I think it's time to talk about munis. So first, I think we should start out with what is a muni?
Great question. So a muni bond is a debt instrument that's issued by a municipality. So take, for instance, a city, a state, a school district, a university, and so forth. And those are just to name a few examples. And the funds from those bonds are used in turn to fund things like capital projects, roads, universities, hospitals, new student dorms, and things like that.
So Lauren, what is compelling about muni bonds now?
Well, Jim, munis have really experienced the same painful process of rising rates that we've seen really across the industry. But the silver lining of that has been that the rising rates have led to historically high yields. And as you know, a key part of our philosophy is that that starting yield is a good predictor of future returns. So at this point, given where the historically high muni yields are at, we think that this could potentially be a really good entry point for investors.
I would also note that muni bonds typically have very high credit quality with low default rates over long periods of time.
Yes, absolutely. And that's still the case, Jim. So, between the excellent, for the most part, credit quality, as well as the historically high yields, we do think that this is a particularly good entry point for investors. We always encourage our investors to take a long term view in their investments, and we really think that this could help our investors over the long term.
Well, thanks, Lauren, and thank you for bonding with us over bonds.